Hello, everybody, and welcome back to Cryptic Humility. As always, going to put the top 10 cryptocurrencies on the screen and their prices here for your review. We do have a guest speaker this week. We'll talk about him a little bit at the end of this news section. Not too crazy on the news this week. I really want to capitalize on a couple things I feel like we haven't talked about yet. One of those things is we're always talking about crypto advancing, especially in the United States. You know, we're super pro crypto. We're moving forward with regulations, and that's all great and good. But we never really talk about all the countries that have banned crypto. It's hard to believe that there are countries out here that completely ban and do not accept crypto. And I'm going to list some of the companies. I'm going to list some of the countries to you. The biggest one that if you are even remotely in the crypto space, you know this to be true already is China. Then we have Egypt, we have Nepal, we have Bangladesh, Iraq, Algeria, and we're going to come back to Egypt because this is going to prove an interesting perspective. But so obviously one would assume why countries don't want to get involved in crypto. The most obvious reason is that there's so much price volatility. There's so much volatility in the crypto space. We were experiencing for many, many years a lack of regulation too, which led into a lot of fraud, scams, schemes, illicit activities. And the other side of this is that some of these countries just don't see the value of having crypto. They don't see Bitcoin holding any true value. Now, of course, we have some countries that completely ban crypto, and then we have some that have like extreme warnings about using crypto. China has complete bans on crypto, we know that. But I wanted to bring back up Egypt because I find this so interesting. Countries like Egypt ban crypto for religious purposes. Basically, they say that crypto does not align with Islamic law due to its risks, its fraud, its potential scams, and just illicit behavior. It just does not comply with Islamic law. Of course, with anything though, you're still going to have a small amount of people that are doing illegal activity and trying to trade internationally on a crypto exchange if you live in Egypt, which by the way, I would absolutely love to go to Egypt. That's like one of my top places that I've always wanted to go to travel the world. I just feel like the pyramids and riding a camel through the sand would be like so electric. However, if you break the law in Egypt and you're trading crypto and they catch you, you can have fines up to $10 million. You can have imprisonment, of course. I find that this perspective is so interesting because, like, as a Christian, you know, of course, like, we're not supposed to steal, we're not supposed to sin, we're not supposed to cheat, like, all these things. I get that. But there is risk in everything. There is fraud in everything. There is volatility even just in the stock market. Obviously, there is some, more truth to the stock market in regards to tangible value, but I just find it so interesting because I feel as though we would be banning a lot of things because they don't comply with the Bible, for example. So no hate to this, just very interesting take that some countries are completely strict about crypto, completely banned crypto. Crypto still hasn't reached its universal potential yet. There's still countries that are in doubt and still skeptical of it. Okay, so with all the skepticism and all the doubt, I want to bring up a really good point. Even if you don't believe in Bitcoin, for example, if you don't want to trade crypto, you think it's too volatile, you think it's too risky, one of the great things I think about the crypto space as a whole is, and we haven't talked about it too much on the show, is stable coins. How can stable coins impact the American people for the better? Why should I go on a blockchain and trade for a stable coin to do transfers and transactions? It's been a while since I brought up me working at the bank, but I think it's time. We bring up the bank again, just to remind everybody of the trauma. No, but seriously, so when I worked at the bank, the wire time on a Friday was like at 3:30 in the afternoon, which means that you had to get your wire in before 3:30. And there's so much information and it's such a process to be able to send a wire. The blockchain is 24/7. So if at any point I needed to send money to someone or send, like institutions, and we'll get to that in a second, but if I needed to send money to someone at any given time, I could do it directly on the blockchain. And honestly, I could probably do it on my online banking, and we'll give an example to that as well. But there's just so much more potential time. I don't have to be regulated and slow like the bank. The bank is really, really slow. And to be completely honest with you guys, it's outdated. And not for nothing, but also the bank. I remember when I used to do wire transfers for people, the fees were pretty significant at the bank. They weren't like, no, definitely, yeah. Actually, they were like bigger. They were more than PayPal. It depends obviously how much money you're transferring, but the fees were pretty significant significant for the bank to be able to do that and to do it slowly, by the way. Here's where I feel like this would be one of the best use cases for this. If you had a crypto startup and let's say one of your vendors is international and they're in France, what are you going to do? I mean, obviously you could use PayPal, but like it would be so much easier to just hop on the blockchain, create your wallet, do whatever you need to do. And actually there are certain banks that are even helping make this process even more seamless for you, which we'll talk about. I'm like, try not to spoil it. But if you have a crypto startup, the easiest thing would to be hop on the blockchain and send a stablecoin payment. The reason why is because obviously we know the stablecoin is pegged to the US dollar or pegged to a tangible item like gold, for example. So it's a cryptocurrency that has not as much to little to none fluctuation because obviously it is backed by something stable. It's been such a weird day. I'm in like such a weird, goofy mood for this episode. Another simple thing is that we're moving so much to decentralized social media, and I need to talk about decentralized social media more on this podcast, and I have to remind myself. But if you're on a D app and you're, using a Web3 D app, for example, it's like Decentraland or something like that, you can send payments typically directly through D apps, and why not use a stablecoin to be able to do that? Obviously, you might use the D apps token if they have their own, but you get the gist of what I'm saying here. Why do we need the bank? Why can't we just do it individually with ourselves on the blockchain at any given time for lower fees, for faster transaction times, and we're involving digital assets, which are cool. So getting into the meat of why I'm talking about this is because JP Morgan has a stablecoin called JPM coin. Now, what's really cool about this is what they're doing is on their base blockchain for all their existing clients, and not retail clients, but more businesses, institutions. What they're doing is they're allowing these businesses and institutional clients to be able to send direct payments to other vendors or, customers that they may work with directly through JP Morgan's blockchain using JPM coin. One of the first points that I really want to capitalize on is that this is eliminating a lot of congestion in cash in transit. Cash in transit is just money out there waiting to be processed and switched back and forth between somebody who is selling and somebody is buying, for example, or, requesting money and receiving money. So we're removing a lot of cash in transit, and I think that removes a lot of the congestion that happens that prevents things from running smoothly. What I think is really cool about the JPM stablecoin too is that it is fully redeemable. So even if you transfer your money to the JPM coin, because it is a stablecoin, it's pegged to the US dollar, and there's like basically no fluctuation to it. It's like you can just redeem your money back if, this customer or this vendor I don't owe any money to anymore, we're going to barter with each other, I can just transfer these funds back into my bank account. So we have a key term this week that we're going to be talking about too, and that's liquidity silos. The reason why we're capitalizing on liquidity silos is because JP Morgan is trying to reduce them. To explain this super simply, JP Morgan is trying to reduce liquidity silos in the sense that liquidity silos are different sectors of a liquidity pool. On Uniswap, you can have a pool of assets by a ton of people, liquidity providers, etc., all in one area. The problem is that if something happens to that liquidity pool, it can cause a lot of disruption for everybody that's using the liquidity pool. So, or, it can be a very seamless way to be trading. So there are pros and cons to this. Liquidity silos are when there is a specific liquidity pool or money market that is tied to just two assets. One original cryptocurrency, for example, and then a bridge asset like ETH or Ether. So Ether is at the center front of all these separate silos that are different liquidity pools doing different tasks. For example, like loans and bonds. For example, those two are similar but different. We're going to want to separate them. But if we need to do conversions in this whole section, we can use ETH to be able to do it. Just to paint a picture to you guys of kind of how this works. Liquidity silos are said to protect securities because, like I said, if we're all in one big trading pool and something goes wrong, multiple people can be affected by it. If we're in liquidity silos and we have a conversion coin that we can use, for example, like ETH that's universal, then we can kind of coexist with each other without affecting each other. The only thing with that is that it can kind of create less liquidity in a way. It can create a lot of delays. There's a smaller order book, so there's a little less opportunity compared to just trading in a massive pool. But going back to JP Morgan, they don't want to use liquidity silos. They want their customers to seamlessly be able to use the base blockchain with all the resources and all the assets right there. So they must have maybe used liquidity silos in the past and realized that the liquidity was really fleeting through this process. They have a stablecoin now where you can just convert it and then send money with lower fees, faster travel times or transfer times, and be able to network with all your current vendors and clients if they use JP Morgan. So I think that this is awesome. I think this innovation is needed, and they're saying that customers that are using this too, they want to open the door for them to be able to do or start receiving interest, and hopefully probably they'll open this up to retail customers. They're just waiting to hear back for approvals, compliance, regulations, etc. Silo Labs had a scandal back in July. I don't know how huge it was, but I wanted to draw awareness that if anybody was interested in looking into liquidity silos a little bit deeper and doing some deep dives, I do have their X account linked down below in the podcast episode if anybody wants to go do some research and kind of just learn more about this topic. I found it to be very fascinating. Clearly. The last thing that I really just want to briefly go over is Ondo Finance, which we know is under investigation for a long time with the SEC. They started back in 2021, and they are a real-world asset platform, meaning that they're trying to get real-world assets on chains, commodities like gold, etc., being able to tokenize them and then being able to track them on a blockchain. So much easier. I thought this is important to mention that the SEC just closed their case with Ondo Finance, meaning that they just released and dropped all charges on them from back to the Biden administration. This is almost now a year and a half from the Biden administration when, the SEC was questioning Coinbase, every single company pretty much that was pro crypto. So it's interesting that this case just now got dropped, and also the SEC dropped it because they didn't find anything that they were looking for. One of the biggest things that Ondo is involved in is they're involved in treasuries, bringing treasuries on chain, which is really interesting. Nothing too crazy with the news this week, guys. I really want to talk to Zach. He is our CPA that we are having on the podcast this week. Super excited. We're going to be talking about some crypto startup best practices for tax season as well. And also we'll be talking a little bit about the individual, just a regular person trading crypto best practices. So without further ado, let's bring Zach on. We are continuing on with accounting with our first ever accountant to come onto the podcast. Yes, you. So excited to have you, Zach. Thank you so much for coming on. And not only do we have an accountant on, but we have a very credible accountant coming on today. So excited to talk about personal crypto when it comes to accounting, and then also a little bit of businesses too. I think this will be a very effective crash course for everybody that might need it as tax season is approaching as well. So Zach, feel free to go into your history, kind of tell us how you got into the crypto space.
For sure. And thank you for the lovely intro. I hope I can live up to that and make good on all the tax and accounting nerds out there. But yeah, just a cool hour and a half about myself.
We got time. We have all the time.
Man. But yeah, just to make a long and I'm sure, unique story short. So I've been doing this for almost 2 decades, and I start off on a very traditional path where you go to one of the larger firms, see where you fall as far as tax, audit, advisory. So I went down that path and felt pretty comfortable, certainly a tax space, and got quite a bit of experience doing accounting work. And that's a whole other story for another time. But I got a unique opportunity to see things from the billion-dollar family offices all the way on down to just individual taxpayers and how they deal with their own lives in multiple ways. And that's, people, frankly, across the world. So it's a very unique place to start. And then got to the point where either you stay and do that forever or you see what's out in the world. So I was able to go into private equity, start off as a controller, wound up doing some of the tax structuring, some of the deal flow side stuff, which was honestly pretty cool. It was quite the opportunity to see empire building at its finest and into the billions of assets. While I was there, we started doing a little tech thing on the side, and long story short, wound up making the jump to tech startup land. And that's actually how I got into the crypto space originally. So it actually started with just a bunch of the developers, the tech people were going back and forth about this Bitcoin thing. And this is back in the first conversations were in 2014 or so, when, because this is when we were first, myself, I was first getting into tech and understanding how that universe worked, which is a wild place to be, tech startup land. But yeah, they're going back and forth. They're like, yeah, I think this Bitcoin thing might be something. I'm going to grab a bunch while it's, a few bucks here. And then that sort of piqued the curiosity at that point. And then it really kicked off for me in probably, I guess it was 2016, working with a retired Wall Street professional and a few others that were starting to invest into that space.
That's amazing.
And, and me and my silly CPA head working on what's the compliance side? First of all, self-preservation. If I'm going to be anywhere near involved in this, I got a license to protect.
Yeah.
How can I do that? And that's really what started me down this road. And from a super nerdy technical side, just how do we do things the right way so that this is, it's a real business at the end of the day.
Of course, and I can only imagine in the crypto space at that time, like, what truly was the right way to go about things. That's kind of why I wanted you to build that out a little bit more, is like, what were your thoughts about Bitcoin in that time? It's like so much different from asking me, like, when I was in college, maybe in like 2020, for example, because like Bitcoin was up and coming, but like
Right.
in early stages, crypto, and then also like forming some sort of compliance against that. We just experienced regulation with crypto. So I'm just like so fascinated by your ability to take a chance on it and see the opportunity there, because a lot of people were afraid of it back in, 2015. It was still kind of just like a concept. So,
I still remember a Thanksgiving dinner, since, we're just past that time,
yeah.
years ago. Like, it had to be right around that time, where I got a bunch of the eye rolls and the very dismissive talk of, oh, you're working on that weird thing over there, like what's that about? And just,
People will still say that now.
oh, of
People will
course,
still
yeah,
tell you that now. It's like so many people don't understand how the crypto space functions and where its value truly is. So,
no,
we have people come on to try to teach you where that value is. But to stay on track, I want to get into these topics because I know you have like a lot that you could talk about today. We want to use your time wisely.
that doesn't sound like me at all. But go on.
No, come on. We're going to have such a fun show today talking about accounting. But I want to talk about crypto in regards to it being taxable. What makes crypto taxable? Maybe, you could go into explaining some ideas there for people to understand.
So cryptocurrency itself is actually one of the most unique assets you could get involved in, because it's also one of the trickiest. And there's very specific definitions as to what about crypto is actually taxable. And the answer is almost everything.
Right.
And that's where a lot of people get tripped up. And it's not just individuals, it's frankly everybody. I can tell you that we had a very, very large, very recognizable name as a client. And we went under the hood and realized, oh, they almost overpaid their taxes by about $1.2 million, like of actual, like net tax due was overcalculated because they just didn't roll up not their fault, but whomever was in there
Mhm.
was not doing the best job of determining what is taxable and what's not. And the easiest way to think about it is everything's taxable unless you're moving something within your own wallets.
Okay.
So if you buy it, if you sell it, or if you exchange it, so if you go from one token to another, those are all taxable events. And that's not even getting into staking and all the other fun things.
I was just gonna say, yeah. And also if we're holding, so let's say like somebody who's a total rookie to crypto, right? Is
Yep.
just they're on Coinbase, they've held Bitcoin for a little bit
Yep.
and they haven't sold or done anything to it. So obviously are they responsible for any taxes there as long as they continue to hold it, or
It's only when you transact with it. So if you buy it, that's when you start the clock. If you're holding it, the biggest thing I would recommend is on your 1040, on your personal tax return, there's a checkbox on the front page that says, have you transacted with any digital assets? Even if you're not sure, even if a couple years ago, you bought a little bit of Bitcoin or you have some USDC, some stable coin tucked away somewhere, whatever it is, check the box yes. The reason why is because that box, if you check no for whatever reason, it does sort of open Pandora's box. So it gives the taxing authority the opportunity to go in and start doing some digging around because you did answer a question incorrect.
I'm sure you probably
Not to be too fear mongering, of course.
No, it's good. It's good advice. Stay proactive. I was just going to get into too. There's like so many people that have multiple different wallets. It's better to be proactive and to just be honest and transparent at first, because what I was going to ask you is, I'm sure you've had many customers or clients that have come to you where they have not been tracking their crypto at all. Okay. So do you want to go into
Well,
that a little bit?
the best advice I could possibly give for anyone who's new to crypto, or even if you've been around for a while, get organized and document everything. So you don't need to have the super sophisticated subledger set up. And there's so many from CoinTracker, Coinly, etc. There's a million of them out there, future sponsors and such, maybe. I don't know.
I was going to say, what do you recommend out of that software?
So, and I say this as someone who I don't get a dime for saying this. And actually, this is where my own holdings are, but coin tracker. I've
Okay.
honestly found that it's the easiest one for me. I mean, it's the right one to maintain, but for myself, obviously. But I would recommend taking a look through, and there's plenty of demos out there, and their customer service across the board for these guys, they're pretty strong. So don't just follow what I do, of course, different horses for courses and all that, but
I was
try
gonna
it
say,
out.
are you an avid crypto trader?
I may have a thing or two, but I'm not as there's just not enough hours in the day. I'm not as active
Oh
as I used.
god, yeah. If you're gonna day trade it, you need to be incredibly active
Oh,
in the
you
space. So there's just
but
too
I
many
might
people.
but during the meme coin craze, I might have
Dabbled a
I've
little
fallen
bit.
into those waters a little bit.
That's awesome. And going back to your original point too, before I cut you off, which I do often, for beginners, maybe would you recommend all they need is an Excel sheet or
That is a great place to start. So, I mean, most wallets you have, you're able to download into a CSV, throw that into an Excel, and any qualified CPA like myself is able to use what we need to do. So there's some key areas to think about. The most simple is when did you buy it? And that's super important because we want to think about something like what is a short-term holding, which is under a year, and what's a long-term holding, which is over a year. And the reason why that's so important is the taxation.
right?
So if it's short-term, you are getting hit at the highest levels possible on the tax side. Longer term, it's much, much more favorable. And there's, I'll save the tax dissertation on that for a while, but that date means a lot.
Okay, okay. And so are things different for people that are trading on a centralized exchange like Coinbase compared to people that are maybe trading on a DEX? And maybe in that you could talk about different wallets, like if you have multiple different wallets. What are your thoughts on that?
I would say reporting wise and organizationally, it's a little different. So if you're getting into any of the exchanges, they report directly to the IRS. You know, the governmental agency will have a complete download of what you've done.
They already
However,
got it, guys. They already got it.
uh, oh yeah, for anybody thinking that this is
No, like
10
yeah,
years ago, it's those
not.
days are
Yeah.
long over. And I would actually say check their work because I can tell you that things like, all right, so they may have the dates right, but the cost might not be right.
Okay.
So always check that work. And again, I say that and this happens for just regular equity trading and pretty much anything that gets reported to the government. Check their work because it is not impossible for them to have made a mistake.
So same thing for like multiple wallets as well. What do you guys do if somebody has multiple wallets and they haven't been recording it? I know I'm helping somebody out there by asking these questions.
So let me give you a little story. So
Okay,
I
okay.
had a client who was an iBanker by trade. So he's used to wheeling, dealing, a gazillion transactions going simultaneously. So he built out a couple of algorithms that were doing thousands of microtransactions every day across a few wallets.
All right, yeah. That's like a nightmare, but okay.
That yes, it was. That was not my favorite engagement. We set him up actually on one of the sub ledgers and actually had to use that to aggregate everything, go through, validate all those transactions. But that's obviously an outlier because you're talking about a couple million transactions there. For someone, even if they have a few different wallets just, across the spread, there's a few different ways that we can look at it. But the most simple way to think about it, and actually, honestly, you hit it on the head. Download everything, get it into an Excel. Let's standardize the transactions across, which, everyone's got their own sort of organization, but the core data is the same. Pull it out, even if we need to, do a little Excel magic on it. But that's the baseline. As long if we
Good.
aggregate the data, we can do all sorts of things.
And I'm sure there's so many forms and regulations that go into this too. If I guess maybe you can give us some steps. So obviously people have recorded their crypto, they're getting ready for taxes. They're working with you, so they're in good hands. What is their next step? Like what forms would they need to have? And we'll talk just personal this time and then like we'll get into business shortly.
So if you're using anything from a Coinbase to really any of these guys, they do have standardized reporting, which is great. So they have sort of the IRS specific, so they can sort of pre-fill your Schedule D, which is where you want to track those types of transactions for any sort of capital gains, capital losses. They'll have other income. So if you did any sort of staking, you got rewards, any of those sort of fun things, that's a very standardized sort of thing now. And if not, you can typically just go into the dashboard that the wallet should provide and just see, for the year I made 700 worth of whatever it might be. Those are all things that for myself that I would want to see. And then getting a little bit further, you can get something called 8949. That's a specific form. And again, these are things that are typically pre-filled because it's just so standardized now. We want to see all that. So download it. One, we want to check to make sure it's right, which always a good place
Right.
to start because
Yep.
trust by, that little thing. And then we want to see the original data. So we want to see all the transactions as well. So if I'm thinking about this in my crazy accountant head, I want to see the source of truth, which is Coinbase, your wallet, whatever it might be. Then we want to see the reporting that they produced. And then we want to do our own sort of check on that just to make sure everything all agrees across the board. And you would be surprised at what doesn't always work.
I know you just gave us a fantastic story, but do you have any other stories of people that have kind of made mistakes or just any? I mean, I know some stuff's like confidential. Do you have any other stories that you might want to share?
Yeah. My favorite story, and this is one of those, part success, part nightmare type of scenarios
Mhm.
where, and he was actually a good friend of mine. So this is not just a work thing, but
Oh,
he was
good.
in the crypto space from really, really early on. And he had bought about $10,000 worth of ETH and some other things, had it in cold storage, completely forgot about it. And then a couple years ago, found he's like, oh, what's this? Plugs it in, and there's $33 million of assets in there.
Would it be like, so, what's what's your wall? What's your private key? Or no, that's awesome. I mean, that is. I haven't heard many stories about that of people like losing cold wallet storage and then finding it years later.
He was a unique cat, or is, certainly is a unique cat.
So
But
how does that go into taxes though? Like, did like were they after
well,
him or?
no, well, that's part of it. Where technically he didn't realize any of that, so it was just appreciating in value that whole time, and then we had to make some strategic decisions on your tax bracket changed overnight. What do we do now? And
Right.
that's where it's an eye of the beholder thing. Like, what do you want to do with that? And that's obviously an extreme example, but it's
Yeah.
not completely out of the ordinary.
How are they tracking that? If I have a cold wallet, they can't track it.
It's on you as an individual to track it, which is the gift and the curse. As
They're so
soon as you touch them, then all the bells start ringing at that
love
point.
that. Love that.
Basically, you start patriating that into whatever your choice of exchange, wallet, etc. is. And now we have some things to talk about.
Right. And do you think that as for a beginner, would you recommend them trading on something like Coinbase to start or
Absolutely.
okay.
And again, we say that as, not making a dime off of that, but something that's safe, easy to use, and that is not just going to, fly by night and pull the ripcord and disappear.
Right, it's trusted. Yeah. We don't put financial advice on the podcast either, but just speaking as myself, that's where I trade. I don't like go off onto any of the dexes just because I know that there can be like huge risk with that. And on the podcast we cover scams all the time. Oh my god, have you dealt with any scam stories or experiences?
We had a couple of startups that were supposed to receive funds from FTX, that little thing,
Oh my
which
god.
obviously just so that
Oh,
so digging through the aftermath and having to go back to other investors and be like, well, there was supposed to be a big fat check. You know who was leading that last round? Well, not anymore.
that
So we
was
had
huge.
multiple startups that had that particular issue because they had been within the family, and that was a rough one to dig out of. More so, I mean, the economics we were able to work out, but it's more so the trust in the system. And I
Oh
think
yeah.
that was a pretty big deal. We how to navigate this without being too obvious who it was, but we did have an experience where myself and someone else on my team, we were going through diligence, going through particular organization in the space, and it didn't feel right. Just the numbers didn't quite jive.
Mm.
One of the founders also had a history, so the spidey sense was already sort of tingling a
Something
little
was
bit.
off. Something was off.
Right. And so the more we kept digging, the funnier it felt, and the way management was pushing back very aggressively, it just, it wasn't right.
Let me ask you another question. So before we'll switch gears to
Yeah.
business after this. We're kind of going off here, but I was going to ask you, does that put you at any risk? I think it's interesting to see your perspective in this too for people that aren't complying correctly or businesses who aren't complying correctly and you're their accountant, for example. How does that affect you? Does it affect you at all or
Oh, absolutely. If I'm signing something, that's my license, that's my livelihood. If it was ever proven that I had any malicious intent or I was, in cahoots, there's a lot of dangers for me personally, which is why as CPAs we can be sticklers and annoying and tedious and all that, but we do it one, self-preservation, but two, we have fiduciary duty to protect whomever our clients are and the greater good.
right? That's awesome.
It really does mean a lot. It's something I know I take very seriously. The team here, we take really, really seriously.
Of
So,
course, yeah, I can tell, and we're very grateful to have you on the show today. You've already given great insight so far for personal use. I think we navigated that really good in regards to how people should start on their journey.
well, like I said, the most important thing is just be as organized as you can, ask questions, and then trust your instincts. If you're not comfortable with something or if it seems too good to be true, it almost certainly is. So that little voice in your head's like, I don't know about this. Yeah, follow it.
Have you ever heard of any phony CPA like companies in the crypto space at all, or
I don't want to say phony, but they're especially when
you're
crypto was
being
starting to.
nicer? I said you're being nice about it.
What I will say, there's certainly firms out there that will certainly use the branding and post an article or a blog post or something to try to get the SEO hit or whatever it is. There's plenty of that, and obviously, not to anyone in particular, of course, but
Yeah,
do your diligence ultimately. Ask some questions, ask what experience they have in the industry. Yeah, so I don't want to say there's anyone out there with necessarily ill intent or anything, but experience certainly matters.
they're not as good as you, is basically what you're saying.
I would never speak ill of another professional. Come on.
We'll switch gears and we'll get into businesses. So,
Cool.
I guess so this is an entirely different topic. Obviously, I'm not very well versed in this. I know personal crypto taxes. So, I guess where would you want to start off in regards to business taxes? Like let's say we have just a crypto startup. If you want to start a crypto
Yep.
business, what should you do?
The first thing that I would recommend, and this is another one of those, like it's a sort of no kidding, but it helps to just say it out loud, that sort of thing. We call it wallet hygiene. So make sure there's no commingled assets. We want to take a look at every wallet that is theoretically a business wallet for whatever that means for your particular situation. Make sure that you don't have any personal crypto holdings in there, that everything in and out is for the business, and you identify the specific purpose. And so you can get as meticulous as there's a specific wallet for payroll, uh, for invoicing, for accounts payable, for accounts receivable, blah, blah, blah. Like you can get really nitty gritty, or you can just have one operating wallet, ins and outs and all that. But
Hmm.
making sure you identify the endpoints, who's it coming from, where are we sending it to, that sort of thing. But just again, the sort of shorthand that we came up with was wallet hygiene. That's my first, and honestly, it's one of the most important recommendations I can make because it flows through to everything else.
Right, right. Yeah, it's like the foundation of everything. If you're starting a business and you're not organized, then it's going to be one hell of a time for you come tax season.
That is, forget tax season. You have
Or just,
investments, you
yeah.
got partners that you want to pay somebody. It's all important.
And how does that look in regards to, how companies are buying and selling crypto? Maybe treasury to start, but then also there's just companies that are accepting crypto. Is that any different from just, I mean, I'm sure it is, but I'm saying from traditional just accounting? Are any methods different, like for you in tracking that? Or
I would say yes, and this is one of those gray area sort of things where if you think about a balance sheet, and I'll keep that as high level as
simple,
possible.
please help.
Yeah. You have cash. Cash is king. Like that's where every eyeball should go first and foremost. Now, I know crypto has the handy dandy little currency right in it, but technically for accounting purposes, it's not cash. And so that's where, tracking it becomes a little different. You still need to do the same sort of bank recs. It's, same methodology, same ideology really. But there's a little bit of argument, should stablecoins be included in cash because it's dollar for dollar for all intents and purposes. But, the regs are still catching up to all that.
Right, yeah, we're still in like real time regulation right now.
Yes.
I was
Short
gonna
answer is
say
yes.
it's fascinating. I like it because it gives me a purpose to be here, truly, and I'm sure you even more than me. I just talk to people every day, but I think it's amazing to be here in this time because we're really truly creating history, and it's nice to talk to people that have the right intentions in the space too. Now, that's the whole point of the podcast too, is to try to bring on credible, trustworthy people. If you're lost in the space, you can find who you're looking for, and we can kind of try to rebuild crypto's image to the public. So, in regards to businesses, obviously the forms would be different too. I guess, like, what would be your recommendation? Obviously, wallet hygiene to start. Then, would you maybe recommend a software to them since it's like a little more complex?
Absolutely. And that's where the subledger conversation becomes really important. So I know like we've got clients that are only operating in stablecoin, and you mentioned
Hmm.
accepting payments. So like all great accounting questions, the answer is it depends. So what are you actually accepting? Is this just, I mean, we have a client who's a stablecoin payment processor. So it's relatively simple, just the ins and outs, dollar for dollar, that sort of thing. But if you're accepting payments in either, BTC or something a little more spicy, that, going down the proverbial rabbit hole there, the accounting for that gets way more complicated because now you're dealing with both unrealized and or realized gains and losses. You have to start thinking about some of the meticulous details that actually do have to be presented. So if you're working with multiple currencies, the right way to show them is each line has to have its own representation. So each currency you're playing around in has to have its own separate presentation,
I was
which
just
can get a
thinking
little.
I was just thinking I was just thinking, guys, like, before you even start the business, just talk to Zach or talk to somebody to get you started on this, because what you're saying is great and perfect. What's the, most expensive service that you would offer? Is it people that are staking, or is it businesses? Is it treasury? Can you kinda give us a price, not like a price range specifically, but kinda what's cheap and what's expensive for you to do?
Oh man, that's a loaded question. So just speaking for, we don't do billable hours, so we do try to right size everything.
Yeah.
And I would say, it really does depend how big and how fast you're going and what type of reporting that you need. So regardless of the number of transactions matters to a certain level. So if like the jump we were sort of talking about, that iBanker who had algorithms going and millions of transactions, that's something that we look very closely to. And it doesn't necessarily matter what type of where you sit within the hierarchy of the crypto space.
Mm.
I would say from a compliance perspective, which means we have to really roll up our sleeves and cross T's, dot I's. If you have any manner of exchange, whether that's a DEX, there's a couple of exchanges that we were working with that were very niche. Man, the monthly reporting on those, because you're not just sending statements to investors, you're reporting to authorities, and then there's all manner of back end calculations that need to be done, ratios that need to be maintained, and if you're working with any of the big banks or even smaller tier ones, there's a lot going on. So just in my experience, I would say the exchanges are the most detail oriented and the most specific, which the higher the effort, obviously the higher the cost associated, but each vertice has its own unique flavor.
The reason why I asked that too is I just wanted to ask that for anybody that is starting a crypto business that is looking into budgeting potentially and trying to understand how intensive their service is going to be. So obviously, if you're just, what level of crypto business are you starting at, and what you expect with the accounting process? I think that's really like where I was trying to pull you there with
Of
that.
course. Well, I will say a couple of areas of interest that, again, we've seen come up: how you're compensating any employees, contractors, etc. So let's just say for fun, you're launching a token. If you intend on compensating, well, anyone, doesn't really, employees, investors, stakeholders, etc., in token, valuing those tokens becomes a really big deal. Because if you don't have that infrastructure in place, now it's sort of like going down the RSU route and getting into options and all that fun stuff, except it's got an extra layer to it. So going back in time is way, way more tricky and expensive than getting it right before you hit the button.
Oh yeah, I can only imagine. Oh god, I'm so thankful I'm not an accountant. I went to Bryant University for international business, but I studied finance, and that's kind of like
Mm.
where it was, a perfect area for me to be.
Yep, yep, yep.
But so no, I think everything you said was great too, and I noticed too on your outline that I really want to talk about as well is that you have a couple strategies to reduce crypto taxes. So maybe we could talk about that briefly too.
Yeah. So shameless plug. I am on the board for a nonprofit called Heroes United. And I can tell you this again firsthand, accepting crypto. It is a huge benefit. You can either go down the DAF route, you can go down a couple of different structures. But if you are looking to move that crypto, or at least do it in the most tax efficient way, this goes back to the cost basis versus what are you selling it for? Well, you get to actually sell it at that fair market value. So you get the benefit of, one, not only doing the right thing of donating to a charity, but two, you get the maximum effect of that donation, which, I mean, if you're talking dollar for dollar return, that's
Oh yeah.
that's pretty solid.
That's amazing. I didn't know that. And actually what's funny is I run a nonprofit. So you think that I would know that. But
Uh,
yeah, I run a community garden in Boxford, Mass. We fight food insecurity in Massachusetts. So it's a good cause, but never knew that about the crypto space. That's really interesting for anybody too that has, either involvement in nonprofits, meaning like you volunteer at a certain nonprofit. That's definitely something to look into for crypto. Are there any other ways that people could reduce?
Being mindful of the short term versus long term. So knowing,
Oh
again,
yeah.
waiting that year and a day is going to
Right.
save you a lot. I don't need to do the back napkin to know that that day means it means a lot. ultimately, and then being mindful of any sort of tax loss harvesting. So it's similar to the stock game where, yeah, if you've got a couple of knucklehead holdings that are just dragging the rest of the portfolio down, there's a way to, strategically deploy them. So those are
Oh,
some of the simplest areas. And I can tell you firsthand, having held a couple of those meme coins for a little too long,
oh God, they hurt.
they hurt, but then you use them the right way, they come in handy.
Of course, yeah, absolutely, and I think that's a
Except for the
big
prime.
that's a big thing in the meme coin space is, what's their purpose and finding their value as well. So if you can find some sort of value out of that, I would consider that a huge win. And I'm just spewing off questions here that are coming to my
Oh
head.
shoot.
So did we I don't know if you would know this off the top of your head, but do you have is there like specific I know you said there's specific tax brackets. Do you know roughly what they are for people? Or like let's say I only have less than 10 grand in crypto. Do you know what my tax bracket would be?
Well, it depends on the rest of your AGI, so adjusted gross income.
Okay.
So
Oh, okay,
it's
okay.
looking at as a whole here. So it's not just crypto focused.
Okay, okay, that's good.
Unless
Alright.
that's all you have going on, and then that becomes
I'd
a
be
direct
very
line.
jealous. I'd be very jealous if you just have crypto and you're wicked successful. So that's awesome. Let me see if there's anything else that I wanted you to mention. You talked about the 1099 DA starting in 2025. Did we hit that yet or?
That goes back to the exchanges and basically reporting what you bought, what you sold, and the date, timing, all that short term versus long term. So that's just more formally identifying it. So that's man, I actually had the chance to talk to the head of that program for the IRS a while back, and
Oh,
that
wow.
yeah, no, it's something that they've been trying to do, trying to work with all the different parties involved, and it was really tough because I sort of playing both sides of this, but I had clients who were going to be required to do that reporting and getting them set up on the back end. So from the technology side, it wasn't as easy as you would think in making sure that the data was aggregated, scrubbed, and accurate.
Right,
It was
yeah.
a huge undertaking. That's why it took years to actually get.
That would stress me out. But
There's a couple nights there.
oh God, I'm sure, but I mean, you're very passionate about what you do, so that's great. And we need honest people in the space, so it's nice to see people like kind of integrate into the crypto space, even if they weren't originally involved in it. I've talked to so many people that were like teachers and philosophers, and like just how did you end up in the crypto space? But some people just always find their niche here. So because it's intriguing, and another guest speaker said that it's kind of like trading crypto is sexy. It's like a sexy way to invest. That's their words, not mine. But obviously you want to do it safely and maturely.
Yes.
So I guess the last thing that we'll talk about on the show is if somebody does not file their taxes or maybe they file late. I know you had mentioned maybe some penalties. I do want to go into that.
Yeah, so please file your taxes first and foremost.
Right.
That that goes out saying. But if for whatever reason you weren't able to, and there's a whole list of reasons that could be, let's do what we can in a timely manner to get back and get you caught up. So that is a big deal. Listen, things happen, life happens, and I can't remember how long ago it was, but the IRS actually ran a campaign like the nicer, gentler version of the IRS, and it's not wrong, honestly. Like they will work with you. It's not all doom and gloom of trying to deal with them. They are reasonable and relatively understanding if you present the right story and if you're not trying to get one over on the man, that sort of thing, which frankly, a lot of the early, especially early cryptoverse was more on that side of the universe. There's a right way to approach this, and it sort of circles back to some of the key tenets that we talked about, just getting yourself organized, making sure that every number that goes in there has something to support it. So we talk about things like sources of truth. That's a big deal. So if you have indisputable numbers, nothing to talk about at that point.
Right, yeah.
Putting the numbers onto the form in the right way, and then call it a negotiation, call it call it a lot of different things, but getting in there. And I can say anytime I've had to deal with the IRS or any other authorities, going in with the proverbial stack of papers, like, okay, boom, this is what we're
Yeah.
all the support underneath it. This is every question you could think of. We've already answered it. Cards are on the table. Your move, that sort of thing.
I think that's so important and comforting to bring up too, because I think there's such a panic for people if they miss the deadline to file their taxes. I've actually been there before once with the nonprofit. We were a startup nonprofit, just like
Yep.
figuring out things, and we were late. I mean, how obviously if you miss the deadline 1 year, that's okay. You guys can work together. But if somebody's missing the deadline repeatedly, is there are you aware of the fines in the crypto space for that? Or like, could your business license get revoked after X amount of years? Do
Oh,
you
that they can. not finally.
I would assume.
They can drop any number of hammers on you, and that's at the federal level, that's at the state level, and especially in this space where, you can certainly play some structuring games and you can try to, say that you're based globally and then you have like a small footprint here and there's a lot of games that I've certainly seen played and, some for better, some for worse, for sure. But yes, they can drop any hammer that they deem adequate. That's why it's so important that
Stay on track. Yes.
even if you miss it, go back, file, take your medicine, that sort of thing.
Right, yeah.
We can certainly present things to try to minimize the damage, and they do have abatement programs, and there's all manner of things that can be done, but yeah,
Good.
you got to come to the table.
Good, yeah. They'll give you multiple chances, like you said, to make things right. And then obviously you'll have a team to be able to help you as well.
Right.
So, okay, good. That's so important for people to know too, because I'm sure there are people like sitting here kind of panicking. Oh, I haven't filed my crypto. Like, I know there are
I
people. So I think that's important to mention too, is that the IRS is more than willing to work with you to solve this. They understand that crypto was pre-regulation and now is undergoing regulation. So of course we're all going through this together. This episode, Zach, is there anything else that you want to capitalize on? Maybe just pieces of wisdom to leave with people. I mean, you gave us so much today. I fired questions at you, so I'm like very grateful for everything that you've answered. Or just anything left that you didn't get to say.
honestly ask questions. So, I mean, obviously, I'm more than happy to chat away, as you can see.
Yeah.
I don't stop. But find someone you trust on the accounting side, on the tax side. A lot of times we have to go in and do fire drills and cleanup work and all that. I do not recommend that. It's expensive, it's tedious, it makes a whole lot of people unhappy. Even if there's not a formal engagement, you don't need a CFO right away necessarily, but have someone there that you can trust to bounce these questions off of, whether it's at the personal level, the business level, whatever it might be. Do your research. So even if all the dollars are going into the next altcoin, or if some celebrity's pushing X, Y, and Z, be careful. So do your diligence, trust your instincts. If you're not comfortable, don't. Like
Right.
that's the best advice I can give.
Yeah, don't follow the crowd. Don't follow the get rich quick schemes in crypto. That's one of the biggest things that we promote on the podcast is listen to your own intuition, but also there are so many practical ways to get involved in crypto. I know they're offering it in IRAs now and 401ks, and of course there's still maybe a risk there of like for sure because crypto's, like it's
Well, there's
still
always the volatility risk, of course.
yeah, so but I think there are always more sensible ways to get in crypto. Make sure you are compliant before you start a business or your personal crypto. Seriously, obviously I will have all of Zach's information listed at the below of the podcast or podcast description, resources, your contact information, and then obviously you guys can see this podcast episode uploaded and you can drop any questions down below there too. So, Zach, I want to thank you so much for coming on to the podcast and answering all of our questions today. We definitely will be in touch with you probably in the future. We want to hear you and your crypto journey a little bit further. And thank you guys for watching. We will see you guys next Monday on Cryptic Humility. Thank you.